राहों में जान है, घरों में चिरागों में शान है। राहों में जान है, घर में चिरागों में शान है। दिवाली है, देखिए ज़मीन भी आसमान है। Hello and welcome to the ET Money Show. I am Kavita Thaplyal and you guessed it right. This is a Diwali special with a very special guest who needs no introduction. I am talking about a Group President MD of Kotak Mutual Fund, Nilesh Shah. Welcome to the show and a very happy Diwali to you.
Happy Diwali to you.
It's so nice to meet you off Zoom. I mean, in-person meeting, I don't think so. It happened like in what, so many years?
Yes.
Yeah? How does it feel? Because the year that just passed by, or we are entering the new Samvat, a lot of things have happened. Okay, we saw a war, we saw FII selling, and now there's Diwali, where people are so happy out there shopping. What is your shopping list like? Are you done with Diwali preparation? There's something left still?
So that department belongs to my wife.
Okay.
I don't interfere there.
Not at all. You just do whatever is asked you to
Yes.
do.
She'll do all our shopping.
Yeah. But then if I just let a few past years just go by and talk about my favorite Diwali memory, apart from the Saaf Safai part, which my mom always made sure that we clean the house, like every nook and corner, which has been your most memorable Diwali thing, or what is that one thing that about Diwali that really strikes you right now?
So we always come together as a family, extended family, to do Diwali puja. बचपन में हम उसे पूजन कहते थे, चोपड़ा पूजन. अब चोपड़े तो रहे नहीं, but पूजन has continued. So that's celebration with family, friends. We do the pujan and then we all go out for dinner. So that's the best part of Diwali.
So far you told me that shopping and preparing for Diwali is your wife's department, but then has she been complaining about inflation? Has she been complaining about, okay, मेरा budget थोड़ा सा बढ़ा दो, इतनी shopping करनी है मुझे?
No, she is far smarter than me. So she knows how to manage within the budget.
That's very nice. That's very nice. But then talking about markets and talking about investor sentiments in general, so far how has this year been? I mean, investors have gone through a lot, especially the ones who've been new to the market have learned a lot. I mean, this entire phase is a very good learning for those kind of people who are new to the market and new to investments. What has been your observation as an AMC person, as a person who always goes out, interacts with the investors and guides them? What are the questions that they are asking?
So initially when market used to correct, we used to go out and tell investors, don't get worried. India growth story is long term, and so on and so forth. Nowadays when market corrects, they give us the money and say, Nilesh bhai, don't get worried. We'll send you money, you go and buy. I think the maturity which our investors have shown, the support which mutual fund distributors have provided in hand-holding 3.5 crore customers, that has brought a sea change. This was the first year in my 3 decades of career where FPI selling did not impact market as much as it would have. And it's all thanks to the retail investors and mutual fund distributors who have ensured 12,500 crore of SIP flows month after month.
But do you see this staying intact? Because we all know FIIs, you know, I mean, right now if you talk about India as an emerging market, it could be slightly expensive for them, but then that time horizon could be for a few years. In long term, it's really priced well.
So I'll give you an incidence. I was pitching for India with one very large fund manager, and one of my slides was that India is trading at huge premium to its emerging market peer group. Our historical average premium is about 40% over MSCI emerging market. Now we are at 80% plus. And he said, Nilesh bhai, change your outlook. On a 1-year basis, India is expensive, but on a 5-year basis, this is the cheapest emerging market.
Excellent.
When you sit on my chair, you don't make investment on a 1-year basis, you make investment on a 5-year basis. Now this was a revelation. I think India is transiting from being part of global emerging market to becoming a single country allocation.
Okay.
We will get money on our fundamentals, on our earnings growth, no matter what happens to the emerging market, if we can make that transition. And the beginning of the transition has begun.
but the challenges are still intact. I mean, the FII selling, okay, if that's not a trigger, then we still have the war going on, oil prices, the demand and supply constraint. The factors almost are still the same, and they look like as if they will be continuing. So we are talking about India growth story, but then the incident that you just narrated, what is it that FIIs are looking at?
So FPIs are looking at three things in India. Earnings growth. We are far superior to our emerging market peers. When I started my career, we were $300 billion economy and $300 billion GDP in 90s. Last year, we were $3 trillion economy and $3 trillion GDP. So mota 10 times growth. Over next 30 years, can we grow 3 trillion to 30 trillion? Answer is possible. Now, whether this happens in 25 years, 30 years, 35 years, one can dispute. But can anyone dispute the direction? Answer is clearly no. So there is earnings growth. Second is the governance standard. In Russia, the largest private sector oil company's chairman fell down from a hospital window and died. He's the 8th businessman to die in this suspicious scenario. In China, private sector, the largest private sector enterprise is most celebrated entrepreneur has been made to sit at home.
Right.
So we have governance which is far, far superior to all our peers. And finally, we are focused on green. We'll be the only major economy in the world which is on its way to achieve Paris Accord target by 2030. So green growth and governance, this is unbeatable combination which India offers to FPIs.
Let's talk about China, because this is a very interesting phase for India to become the global manufacturing hub. But as per the predictions made by IMF, what according to you would actually help India supersede in this particular area, and what are the factors that we should actually bank on and work on towards?
So China will remain manufacturer to the world. But if we leverage our strengths, today we are global leader in automobiles, in mobile handset manufacturing, in generic pharma. We have certain advantages. For example, we grow very good amount of cotton. We know how to spin yarn. We know how to weave fabric, but we don't know how to stitch a garment. Now, is it a difficult thing? Answer is no. China's garment exports will be $250 billion. We are stuck at $16-17 billion. So if we go niche area by area, I think India can become a reliable supplier and part of the global supply chain. If you look at India's problem in one line, there are 10 to 15 crore Indians which are working in agriculture. They should be working in industry. Whether it's manufacturing, services, doesn't matter. And how do you create that employment? Garmenting can easily take a lot of workers.
Let's talk about Diwali dhamakas. So now the new Samvat, obviously we are going to talk about that. What according to you is going to be an actual Diwali gift for the Indian investors, talking about market trends or the growth story that we just discussed about India? What's going to be the major dhamaka or Diwali pataka in that sense for us?
So the best thing for Indian investors is the India growth story.
Totally.
We are transiting from $3 trillion to $30 trillion economy over next 30 years. Direction is certain, timing could be different. In a rising tide, every boat will get lifted. And that's the opportunity for Indian investors. Now someone say, I don't have 30-year horizon, fair enough. But let's look at over last 30 years, we created about $2.7 trillion of market cap. Next 5, 6, 7 or 10 years will create similar market cap. So what you have seen in a slow motion of 30 years, you will see in a fast forward of next between 5 to 7 years. That's the best opportunity for India. If you missed last 30 years, boom, doesn't matter. Same picture is going to come in a fast forward manner over next 5, 7 years. Just grab the opportunity.
So we usually, obviously, when it comes to investing, one needs to have a longer time horizon, but we also have viewers who wants to know what's going to happen in few quarters and, you know, in 1 year's time, paisa kahan banega. So talking about sectors specifically, where is your focus and which are the good sectors according to you that might just reap you a lot of profits, and few sectors which could be challenging for like 2 years time?
So challenging point of view, it is never the sector, it is always the management.
Right. Okay.
If a boat has a hole, it can never rise whether it's low tide or a rising tide. So never ever invest with bad managers, bad governance. That's the only thing to avoid. From a sectoral point of view, subject to good managers, good management, we think banking sector will do very well. Today, if you have to do a borrowing or a lending, you are likely to go to 5 banks. So there is consolidation happening. Cleanup has already happened as a lot of NPAs are fully provided for. Interest rates are going up, so margin will expand. And finally, valuations are reasonable. And now you have seen not only the top tier banks, but also the mid and small tier banks bouncing back quickly. So banking looks one sector which will do well over next couple of years. Manufacturing in India, thanks to China +1, thanks to Europe +1, is slowly picking up the pace. In chemical sector, we have seen Indian manufacturing companies doing very well. The same trend will get repeated in many things. And this time opportunity is not only for big companies but also small companies. A place like Morbi, their tiles exports will be anywhere upwards of 15,000 crore. They are facing the world confidently saying that cheaper than China and better than Italy. And these are the small, medium enterprises from Morbi collectively dominating the world. So I think there is renaissance coming in India's manufacturing sector, be it capital goods, be it industrial goods, be it engineering companies, be it chemical companies. And there will be many more such sectors, including in auto components. So we have a great opportunity in banking and manufacturing if we can pick up the right management.
Talking about investment trends, we are looking at a lot of attraction towards passive investing, and even the AMCs are launching a lot of index, ETF, and passive funds, to say so. Is this an investor interest shift, or is it something that we are seeing in the West? It's also following in India. Talking about large caps specifically, active funds are right now not able to perform. Is that the reason why a lot of passive investment trend among investors, and it's actually getting in their favorite categories?
So to me, it's glass half full or half empty. Bulk of the AUM in passive category is thanks to the government. In equity, it is EPFO contribution or CPSC and Bharat 22 kind of ETFs where government gave incentive for people to invest. Rest of the investors haven't yet really picked up passive funds as much as is being made out to be.
Okay.
And the alpha generation is still not over.
Right. Exactly.
If I look at Kotak mutual fund schemes across equity and hybrid, bulk of the funds, bulk of the periods, we have been generating positive alpha. And this is despite the fact that index fund per se underperforms benchmark indices because of transaction cost, because of variety of other things. So my feeling is that as manufacturer, I have to give both the choices. As long as I am adding value to my customer, my active funds will sell. The day I stop adding value, my passive funds will sell.
Right. So there's an entire bouquet that investors can go in for.
Absolutely.
Okay, one very exciting thing that's going to happen on the show is we have a lot of viewer queries and they have asked questions specifically to be answered by you. And so shall we just go ahead with these
Yes,
questions?
please.
So this question is from Prateek Gupta, and he wants to know, how can one make money in the current volatile environment? Which asset class is a must-have in their portfolio?
So Pratik bhai, you have to eat everything to maintain your physical health. If you eat only soup and salad, after some time you'll start craving for pizza and pav bhaji, and your soup and salad will go for a toss. So the best thing is to maintain balance. Please invest in real estate, gold, equities, debt. That balanced portfolio will give you outperformance in a market like today. And more importantly, when you are diversifying across asset class, you are following the dictum, don't put all eggs in one basket. Now, if real estate does well and equity doesn't, then take some profit from real estate to equity. If equity does well and fixed income doesn't, then take some profit out of equity to fixed income. That disciplined asset allocation and diversification will help you meet current volatility.
But then, do you think one should really hurry up in rebalancing the portfolio, and reviewing the portfolio is very important, definitely. One should not do it every day, maybe once in a few months that can be done. But then when you are rebalancing it in the current time, what is it that one needs to really take care of?
So essentially, how do you make money? Buy low, sell high. That's the simple answer. How do you achieve that? The only way to achieve that is through disciplined asset allocation. Now, things which have fallen would have become cheaper, so it's time to shift from other asset classes into that. Things which would have risen would have become expensive, so it's time to rebalance. If you do rebalancing once in a 3 month, once in a 6 months, that's more than sufficient.
Okay. Earlier in this answer, you spoke about soups and salads. So I just wanted to know, which is your favorite mithai for Diwali?
See, I am a Gujju bhai, so rest of the people eat to live. I live to eat.
I remember karanjis are still my favorite. So what happens with karanjis is mom usually makes it, but then the best part is I also wait for others to give us karanjis. I mean, it's that one sweet, but then the way it's made at different houses in different ways, that's the most exciting part.
Absolutely.
Let's move on. Madhusudan wants to know, is it right to average mutual fund investments when the overall market is at a lower valuation?
Undoubtedly, Madhusudan bhai, puri Gita ka sar yahi hai, buy when valuations are cheap. It's so easy to say, but very difficult to do. It requires tremendous courage to buy when everyone else is selling and sell when everyone else is buying. But how do you make disproportionate return? If you follow the herd, you will never make that.
Right.
If you go against the herd, if you go against the trend, you will make it. So undoubtedly it makes sense to become overweight equity when valuations are low.
But how does one understand the valuation is high or it's low? How can we gauge this?
So I have a very simple metrics. When I go to a party and my cousin brothers avoids me as if I am a plague, that means that's the bottom of the market. If I go to a party and my cousin brother tells me what I should be buying tomorrow because it's going to go up, I know it is the top of the market. For me, my cousin brothers are perfect barometer to figure out whether it's top or bottom of the market. So there are various ways in which you can do. Generally, quantitative ways, PE ratio, price to book, and so on and so forth. But it's not quantitative alone, there is psychology. So a saying is that जब पान वाला आपको बोले कि ये stock खरीद लो, तो you know it is the top of the market.
Interesting. We have Riya Nair asking you, how can Indian investors benefit from rising US dollar, or is there any risk investing in dollar?
So undoubtedly, Riya, there is big risk investing in dollar. 40% of all the dollar outstanding today were printed last year. The Fed has been a printing press, and it's basically they cut a tree and put some green ink on it and say this is $1 billion. You are believing in that. So undoubtedly there is a risk. Who would have thought that yen, euro, GBP will depreciate so much?
Totally.
Same thing can happen in dollar. Now, the way to benefit out of strong dollar is by taking advantage of LRS, which allows an individual resident to take some money out and deploy that money in US. Today, US treasuries are giving 3-4% return, which is quite decent. The junk bond in US gives about 9-10% return, which is risky but still good enough. So use LRS to take money out and then invest in equities or debt in US market. But it is risky. There's no risk. There's nothing which is called free lunch.
So talking about US markets, how aggressive you think now a US Fed can actually go? Because sentiments are really low. We are looking at the numbers and the data also. Do you think what they wanted to achieve by taking an aggressive stance so far is almost there, or there is room for more aggressive rate hikes?
So Fed is like Anil Kumble bowling googly. कहते हैं कुछ, करते हैं कुछ. They typically demonstrate the Hindi song, जाते थे जापान, पहुंच गए चीन, समझ गए ना. on one side they are raising interest rates, but on the other side they are not taking away liquidity as fast as they should have taken. The balance sheet has not come down as much as it was expected. So Fed also is in dilemma. They want to control interest rate, inflation rate undoubtedly, but at the same time they don't want to disrupt growth beyond a point. Now, because in the first phase they didn't demonstrate that resolve, market took them for granted. Now they have to create fear in the market's mind, so they are becoming very hawkish. My personal feeling is that we are likely to see a V-shaped kind of ulta V-shape in interest rates. Fed is raising interest rates, and one day because of commodity prices coming down, or because of Fed's action, or because of some other thing, as inflation comes under control, they will quickly shift their focus to growth. Like Bank of Japan, which started cutting interest rates way back in the 90s, until today haven't found a reason to increase it. Most central banks around the world will do that. US has $30 trillion of debt. A 1% increase is $300 billion payment. Their budget does not have that kind of surplus. If interest rate indeed goes up by 3%, that's $1 trillion equivalent. Where does US have that kind of money?
Right, right. So for at least 6 months time horizon, we can say dollar will be like the Sultan or the Badshah of all the currencies. That's how it's getting.
So dollar is right now TINA factor. You are getting higher carry, and it is considered safe haven. Like we have muscle memory, traders also have muscle memory. In every crisis in the past, the safe haven is US dollar. And on top of it, you are getting 3-4% interest rates. So money is going over there, and that's why US dollar is appreciated. But stronger dollar is generally harbinger of financial crisis in other markets. Now, will there be pressure to create a Plaza Accord equivalent? In the 80s, when yen was becoming strong, there was a Plaza Accord to ensure that it starts becoming more stronger. Same thing will happen on dollar, where GBP, yen, euro and other emerging markets will put pressure on Fed that please lower the strongness of dollar. Today Fed is not talking about it because it helps them in controlling their imported inflation, and US is world's largest importer of goods. But eventually when inflation comes under control, they'll have to look at dollar strength, otherwise the entire global financial system will come under pressure.
So talking about India's monetary policy, now is it a dilemma for RBI to go aggressive on rate hikes and also see that the growth that's already started slowing down should not deepen?
So I don't think so it's dilemma, because they have been navigating across this crisis quite nicely. So it's like Sachin Tendulkar betting on a 5th-day pitch, and he's timing everything so nicely. So you start believing that, okay, this pitch is normal. When other people come to bet, you realize how difficult the pitch is. So RBI is right now like Tendulkar betting extremely well. We are genuinely blessed by the God that we have got RBI kind of central banker. In 2008 crisis, I remember Nobel laureate Joseph Stiglitz making a statement that if US Fed had Dr. Y.V. Reddy kind of governor or chairman, the subprime crisis would not have happened. I'm sure some Nobel laureate is going to speak similarly for for Mr. Shaktikanta Das.
That's interesting. Do you think rural economy should be in focus now, because the kind of inflation and the kind of concerns that are rising up from there, how long that can be stretched for?
So undoubtedly we have to support rural economy and focus upon that, because 70% of India still stays there. If you look at tractor sales, it is the only automobile segment which is at multi-year high. That means part of the rural economy is doing well. My feeling is that we have seen K-shaped recovery. The upper middle class and rich guys have actually benefited from COVID. Their spendings have come down, income is more or less the same, and they have increased savings, so they are now spending. The middle to lower end of the society, bottom end of the society got impacted by COVID. They survived by borrowing or selling their balance sheet, liquidating their assets. Now their income is restored, but they are repairing balance sheet rather than spending, and which is where the consumption at the bottom end of the pyramid is still slow compared to, let's say, top of the pyramid. एक गाड़ी खरीदनी है तो 12 महीने का वेटिंग पीरियड है, but at the same time biscuits and shampoos and detergents and other things are not being sold.
Yeah.
So we are seeing this uneven recovery. The hope is that this Diwali people will come and spend and consumption will become positive. So far the results have been mixed, or the signals have been mixed.
Exactly.
We'll have to wait for the data to see.
Yeah, that's what, because so far what we are also witnessing is consumption, especially for the festive season, it is showing up, but then we still don't know, will it sustain, and is inflation really pinching them, or it's about to start doing all this. What's happening is, even for housing sector, I mean, you might just want to talk about that, because real estate has really not gone up in terms of demand and bookings and inventories also. We are saying there's a good response, but then is market really acknowledging that?
So undoubtedly market processes all the information, and the collective wisdom of market is still positive on India growth story. Maybe things will get delayed by at best 3 or 6 months. This time our problem is not internal situation. If consumption doesn't revive in September, it will revive in December, if not December, by March. Our worry is external. If there is energy crisis and oil goes to triple digit, then certainly we will be in trouble. Our trade deficit is unsustainable. It's probably running $100 billion more than what our comfort range is. Now that needs to be brought down, and we can't bring it down by increasing our exports, because global growth is slowing down. So I have to reduce my imported goods demand. Our challenge is US Fed rate. If it continues to rise disproportionately, there will be impact on my equity market, there will be impact on my debt market. So we have to far more get focused upon the external vulnerabilities, and fortunately we have $530 billion to overcome those vulnerabilities. But clearly our challenge is external, much less internal.
All right, let's move on. We have Raghavendra asking you, which regulator should retail investor approach if mutual fund distributor shares wrong information? Very interesting.
So Raghavendra, mutual fund distributors are agents of mutual fund. If they have sold anything in terms of wrong information, if they have given you wrong information, please go to the mutual fund. You can go to MFI, Association of Mutual Funds. They enroll mutual funds and they are responsible for the code of conduct implementation. And there is always SEBI available. So between mutual fund house, MFI and SEBI, you should be able to get good grievance redressal.
But then here comes the investor education part. I mean, just blindly believing any distributor or any broker, it's very important for you to do your own homework. How does one go about it? There's so much of noise, so much of information available. How can one filter it out?
So, see, essentially, you have to judge a person based on relationship and experience.
Right.
Is he or she selling product, or is he or she offering solution? Is the relationship transactional, or is the relationship long-term oriented? How do you go and pick up a doctor in a locality where you have just moved? You either go by references, or you go and look at the appearances. If someone has a good clinic versus someone sitting on the road, you are not going to go to the roadside doctor even if he might be the best. And finally, it is your experience. So always take a mutual fund distributor or advisor who is giving you solution and not just product, who is interested in relationship and not just transaction, and who is adding value to you. Get the feel, get the experience, and then only increase the business.
One question I really want to ask, which also a lot of my viewers keep sending, the dilemma is, पैसा जल्दी बनाए या ज़्यादा बनाए?
See, तकदीर से ज़्यादा और वक्त से पहले कोई किसी को नहीं दे पाएगा. Now, अगर आपकी तकदीर में ज़्यादा लिखा है तो ज़्यादा आ जाएगा, और जल्दी लिखा है तो जल्दी आ जाएगा. But when you are looking at investment, you can't depend upon your luck. You have to use your skill. Now, in trading, 99 people will lose money. Only 1% will make money. Even if everyone is the same skill, you still have transaction cost, brokerage charges, STT charges. and this amount is 30,000-40,000 crore a year. So कुछ नहीं करो तो भी 40,000 crore आपको कमाना है to make money in trading. How many people can do that?
Right, exactly.
The world's best trader has a strike rate of maybe 50%. An ordinary person will have strike rate of 10 or 20%. So 10 ट्रेड करेंगे, 2 में पैसा बनेगा, 8 में लॉस होगा. ये 2 ट्रेड का पैसा 8 ट्रेड के लॉस को कवर करना चाहिए. ऐसा बहुत मुश्किल है. On the other hand, investment requires kumbhkarna kind of mentality. In fact, lighter vein of interpreting Ramayana, कि लंका तो सोने की थी, अयोध्या wasn't, जबकि राजा राम अयोध्या के राजा थे और वहाँ पे तो रावण था. So the difference was that maybe in Lanka people were investing like Kumbhkarna, आज पैसा लगाओ 14 साल के बाद देखो, and that's where they could afford a Lanka of gold.
Interesting. Let's move on. Pooja wants to ask you, should I increase allocation in gold considering it's not gone up as it should have? Now that's very interesting because gold is a hedge against inflation, but then instead of gold we are seeing dollar as becoming one of the safe havens. So what's happening with gold?
So Pooja, when you invest in gold in rupee terms, please remember that you are paying 16% taxes. What is worth $100 in Dubai is worth $116 in India. Now higher duty invariably encourages smuggling. So someday 16% can become, let's say, 0. You will lose 16% of your gold value in one single day. You should be willing to prepare. You should be willing to take it. Subject to that, yes, one could put between 5 to 10% of their portfolio in gold. It's a non-correlated investment. It can do well even when equity and fixed income are not doing well. It gives you dollar exposure because gold prices in India is nothing but international price into rupee. So people who can't take money out on LRS, they can consider investment in gold. But 5 to 10% of portfolio is good enough. And if you can invest via sovereign gold bonds, that's even better because you get interest income. You don't have to worry about quality of gold. There is liquidity available. But please remember that there will be one day when you will lose 16% of your gold value in one single day.
Yeah, that will be the word of caution. Tejas wants to know, how should senior citizen hold on to their equity investment post-retirement?
So again, like, not that my mom has invested in equity, but she doesn't care for her retirement because I'm staying with her. And I believe I am taking good care of her. She may have a different opinion. But at 75 years of age, my mom can afford to put 100% in equity because she wants to transit money to my daughters as inheritance. She doesn't need money for her survival. Now suppose if there's someone who does not have any issue, that gentleman depends upon this money to run their house. They can't afford 100% in equity. They need to figure out how to allocate. Invariably, the money which you require to run your house on a daily basis, that should come from fixed income. And the balance money can be kept into hybrid or equity kind of asset class. That will give you growth, but the sustenance will come from the fixed income side. So as a senior citizen, you have to decide what you want to do. If you are looking to give inheritance to your kids, you can afford more equity. But if you are dependent upon that for survival, then definitely you have to have a higher balance towards fixed income.
Talking about retirement, do you have a retirement plan?
Undoubtedly.
Yeah.
I have 2 daughters and I believe they will take care of me as I have taken care of my mother. But I can't depend upon that. Beti paraya dhan hai, aisa kehte hai. Though I am not believing in that, but I would like to live on my own terms. Me and my wife would like to live on our own terms. Sar utha ke jiyo type. And for that I have built my retirement kitty.
But then by talking with your colleagues, I've got to know that you hardly take a break. There's no time. You go back home. They don't know when you come back to office. You're like forever available. I don't think so retirement is anything closer happening with you. What's the secret behind working relentlessly like this? You enjoy it.
When you enjoy doing it, you don't look like that this is work. For me, work is worship. And for me, this is the job which has given me not only money, but also the blessings. Uh, when in our courtship period, my wife was a professor in college, and students will always give respect. And I was always wanting that kind of respect from society, that okay, people will bless me. And now today, many a times we are walking in shopping mall or we are having dinner in restaurant, and people come and bless, saying that beta tumhari wajah se yahan ja rahe hai. That blessing which comes, that gives you the fuel to work.
Yeah. So that's what they say in Hindi ना कि रिश्ते लोग ये कमाई होती है, दुआओं की कमाई होती है.
दुआओं की कमाई है ये.
Okay, let's go ahead, and we have the last question from Kiran. And Kiran says, are we seeing aggressive rate hikes for India just like US for a long time now? How will RBI tackle growing inflation and slowing growth in the country?
So fortunately, RBI has already done hard work, and we believe if oil remains in double digit, then inflation will be below RBI's target level by as early as Jan 23. Now, that doesn't mean that we can take the foot off the pedal. If US interest rate goes ahead, I have to willy-nilly follow. They may do 75 basis point rise, I may do 25 basis point rise. The good part is that the real interest rate differential between US and India is hugely in favor of India. US is massively negative. 3% ब्याज है, 8% inflation है, so they are -5. अपना inflation will be 5 and interest rates are already 6, 590 है, but rounded off 6. So effectively we are in far better shape, but I still have to copy Fed. I'll have to keep on raising interest rates till Fed is raising, and I can only start cutting after Fed has started cutting.
Right.
But my guess is that we are going to see ulta V kind of movement. Fed will have to cut interest rates eventually and very quickly.
So last question to you. What's your Diwali pran? Professional and personal?
So professional तो बस यही करना है कि लोगों की दुआएं और बटोरता जाऊं. And personally, this is the time where I have to take care of my health. God has been kind to me on wealth side, but for health I can't depend upon gold. God, I have to do some work. So maybe this year I'll be more focused on my health.
All right, so you are going to invest in your health, and that's always the right kind of investment we also want you to do. Please stay healthy and wish you a very happy Diwali.
Happy Diwali to your viewers as well.
Thank you so much. And with that, it's a wrap with this very interesting conversation with Mr. Nilesh Shah. But then you stay tuned because there's a lot coming up more.